Hey guys, Tyler St. Louis with Lethia Homes Group and Remax Heritage. Wanted to give you all a little market update on where we're at July 14th, 2023, and where we're going to be, what we're anticipating for the second half of the year. So about a year ago, the interest rates started to go from the lowest we've ever seen in history to working their way up to a point of where they were at 7% by January of 2023. From there, we saw them kind of dip down in the late spring in April and May, and then we watched them go back up as summer rolled around up to that 6.5–7% mark, which is where they're kind of at now. I think I just got an update today that they were around 6.8, which is good because they were above 7% for a few weeks, and that really kind of strongholds buyers and gets them a little anxious. With that, we were also seeing inventory start to go up, which was great because we've been in an inventory shortage for the 6 years that I've been doing real estate and even dating back before that. But when rates started to go up, you had people that were thinking about selling or possibly selling that started to then wait. They were like, we're not going to sell our house when maybe they refinanced 2 years ago at 4.5% or whatever the case might have been, and then go buy at 6.5–7%, which is where they're at now. With that being said, we saw that inventory kind of go down a little bit, and that's basically bottlenecked the demand even more. So while rates are high and some buyers backed out of the market when rates went up, other buyers were still entering the market, and when inventory went down, we're still seeing prices increase. So inventory is so low that even while rates have been high, prices on average on the June report year over year were up 4.5%. From last year, and they were still selling on average of 101% of list price, which is, again, with the rates as high as they are, is kind of absurd that houses are still selling for so much over list price. With that being said, we are seeing buyers get some leverage back, whether that's negotiating power, whether that's having inspections, God forbid. We're starting to see the buyers have some leverage that they didn't have in the last 6 years. And we're also seeing that the inventory, hopefully as the rates go back down, will continue to go back up. But right now it's still pretty low. The inventory's kind of going down, and buyers' power, some buyers left because rates went up. Some buyers are new to the market and they're coming in. But really, I kind of just want to make this short and sweet and kind of let you guys know that we're anticipating rates to come down in the future. The inflation report came out earlier this week, and it's the lowest it's been since March of 2021. I believe it was like 2%, which is awesome for everyone in America, every consumer. So hopefully with that, they're not a direct correlation to mortgage rates, but hopefully that will, fan the flame or damper the fire a little bit on inflation, and then that'll circle back around to the mortgage rates here in the near future, and we'll start to see those rates come down. With that being said, I do want to tell you that with prices still going up, we have a couple different sayings we use in the industry. We call it date the rate, marry the house, or rent the rate, buy the house. That sort of mentality of prices are still going to be going up. If rates go down, they're going to continue to go up exponentially, and then from there, buyers are then going to lose their negotiating power, their inspection power, that sort of thing. So if you're thinking about buying, and you're considering it and you're wondering when's the right time, when's the not right time, I'm just going to tell you that the sooner the better is probably going to be your best bet. I say that because when rates do come down, you're going to start seeing multiple offers come in on these properties like we were seeing a year ago, 2 years ago in 2020, 2021, where now you're going to be spending tens of thousands of dollars more over the list price, waiving inspections, paying appraisal gaps, that sort of thing that you might not have to do right now, but if you buy now, you might not have to do it, and then when rates come down, you'll already be in the house and you can refinance to that lower rate. So rent the rate, date the rate, marry the house, buy the house, and then when rates come down, you can refinance. That being said, while we're anticipating rates to come down, that's also what we were anticipating in December and January of this year. We were anticipating by this time the rates would be down below 6%, around 5.5%. All the experts I'm listening to are now predicting the same thing. But again, that's what they were telling us 6 months ago, and that didn't happen. The only caveat I will say is what I just mentioned about the inflation being down to 2% from the lowest it's been since March of 2021. So there is a little bit of sign of hope elsewhere in the economy that will maybe help bring these rates down a little bit more than where they've been. But if you guys have any further questions about the real estate market right now, let me know. My number is 816-716-6762, or you can email me at tylerstlouis@remax.net, or visit me on my website at alethiahomes.com. Thanks.